The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi, everyone. Basil Chapman sitting in for Larry Pesavento. Of course, you know, earlier on, Larry had said that he's going to take off the week because he expected a very volatile week coming up and he wanted to prepare for it. What volatile week? I mean, what is this? Just over 400 points up on Wednesday, down 600 on Thursday. Hey, congratulations, Larry. That was really a good call on your part. Certainly we've got that, and we have been expecting that over the coming end of March period, there would be some kind of indication that a stalling formation is being formed, and that in March, I keep forgetting this is February. I said that yesterday thinking it was March because I write March so many times looking out that I keep saying March. It isn't. It's end of February, the last day of trading month. And we're going to be looking at April with a sharp decline going into the closing part of the month. And that says that on this monthly chart, here's the YM leg C. Let me just do this quickly for those of you new to my work. There's a very simple formula that I use going back when I used to hand chart way back. And I look I try to identify the lowest low, and then we merely count each successively higher peak. It can go all the way to 6 peaks higher, but it's at 7 peaks higher. And what we're looking at here is that fourth highest peak is where other things can happen. So I alphabetize them, A to G, A, B, C, D. D is where other things can happen, and that's the most important aspect, where we raise the foot off the accelerator, hover over the brake, and if there are a couple of techniques that we look at, if it breaks above to a new leg up within 3 bars, it could be a restart, possibly even another 4 peaks higher, or you just continue the alphabet, whole bunch of things. We don't have to go into that. All we need to look at is, I spoke about this on Monday when I was talking about the peak C1, C2, and that we really needed to have another high to get to that leg D. Pow! Wednesday. Yesterday was Thursday. Yeah, Wednesday, spirals higher. Yesterday, it starts off higher, and then it plunges down. This is the YM, the Dow Futures. So what are we looking at here? Yes, there could be some kind of a counter-trend rally. That was a very big sell-off yesterday. Some kind of a bounce, maybe to the 31,480, 31,590 area towards that trend line. Let's just give it an exact number. Let's just say 31,620. But then there should be a rollover making left side shoulder, head, and a right shoulder to the downside. So some volatility is expected, at least from now. We've started that. I've still got this as a leg C in the weekly charts, the only one that has this count. All the others you'll see in a moment. Let me just show you. Let's go to the ESH21. This is the S&P March futures. And 39.59.25 was the high on the 16th of February. It went down to a low yesterday of 381.50. It's a little bit oversold. It could bounce a little bit. And if it does that, the area we'd be looking at is, I don't know, about 38.76, which is the green 9-period moving average, which is just close to it. Hasn't yet turned negative by going pink underneath the 14-period moving average. MACD is very weak, stochastic, and Larry doesn't use any of these techniques, but each of us, TFNN has our own particular package, our little armor of tools. And what we're looking at here is there could be a bounce, and we'll see if the E-mini is able to climb at least to the low of the 24th. That was Wednesday. That was 38.51, and we're at 38.43. If it can start trading above that, it says, hey, maybe even to Monday where buying comes in for the new month, maybe we go higher. You do not want to see the Dow down 230 points at the end of the day today, and the S&P down, I would say, more than 22 points. That would say, problem coming into Monday. Now, a couple of things I want to look at here just quickly. QQQ, 1, 2, 3, there it is. Made this peak on the 16th of February at 338.19. Comes down to round number 311, has a really good bounce up to the 323 level. The 324 to 26 is the moving average resistance. I would be really impressed if the Qs are able to get by Monday or Tuesday above 317 or 318, that area. That's strong resistance. And look, the weekly chart peak, EN is taken out. This is Friday. I have to look at the candle only at the close today. You can't talk about it as if it's a fait accompli. It's not. You have to wait for the trading 6.5 hours of the day. Friday, the close, you can talk about it. But right now, it is underneath the 314.57 14-period moving average. The MACD is just turned down. Stochastics, very good at 88%. So the weekly charts are still showing good technicals. Monthly chart is still very good. Let's go to the IWM, Russell 2000, having a bit of a bounce here, up 27 cents at 218.88. This is going to be very important because it's holding pretty well. And here's a peak D in the weekly chart. There are a couple of indications that say this could have been on the, I think it was a different date. No, yeah, on the 10th. The high of the 10th of 230.32. We'll see if this is significant, but it has held well because it's been the lead for the last, for subscribers to my opening call. We've been long since middle of November at about 173s, taking little bits off. And here it is at 218, still a very good rally. But I'm watching this very closely. We've been starting to build up a cash position. Let's just look at this, which is very important, gold. Gold is down 15. Look at these. The pattern that I talk about very often, if I can just get to it very quickly before there's a break, is the H pattern, the dreaded H. And what does that mean? It means that there's a sharp move down, and then there's an arch formation that fails and takes out the left side low, and it can keep going low. We saw that in crude oil. We'll look at that in a moment, where you got the Y pattern, very positive Y, because it took out the left side high after the cup formation and broke to the upside. So what are we looking at here? We're looking at the TLT, and this is going to be really, we're looking at gold making a new low. The TLT went all the way down to 136.61. It's trading now at 140.96 in what? Leg D to the downside, and the TBT, which is the bonds, the ultra short Lehman 20-year Treasury bond ETF, is in a leg D with a high yesterday of 21 point. Did it make 21? No, 20.60. Yep. Yeah, 21.73. So 21.73, we're going to be watching that very close to see if it's taken out. Let's see, 73 in the next couple of days. And if the TBT slides under 20, closes under 20, that says, hey, at least the short-term top, the monthly chart is still strong, and the weekly chart as well. Now, this is going to be also very important. Just want you to do silver. Silver at this moment is, did I go to silver? Yes, is down some. It's in this rectangle formation. It isn't breaking down as gold is, but it is kind of weak, and it's just stuck in a range. It's actually on a chart formation, it's very good, but it hasn't broken down. Here's the surprise, folks. The dollar is up 33 ticks at 90.67. Here's this trend line resistance. If it's able to close above, I would say if it's able to close 90.83 to 90.90 today, and then Monday have a follow-through to the 91s, that'll be the first time that dollar's shown some follow-through. I'll be back in a moment. Basil Chapman sitting for Larry Pesavento.
Give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman sitting for Larry Pesavento. This is Trade What You See, and my show is at noon. It's the Tiger Technicians Hour, and my service is the Opening Call Daily Newsletter. Couple of things that we wanted to look at is oil. So the OIH has gone to a leg E. That doesn't mean anything because the MACD is still very strong. Stochastics are very good at 85% in the daily, the weekly charts also. But the on-balance volume is somewhat overbought. And if you look at crude oil, having made this little tiny doji candle in leg E to make a peak E if there's no new high above 63.81 in the continuous contract, and a leg D in the weekly chart, and we spoke about this Chapman Wave inside track repellent zone in the monthly chart going to a leg B and then just stalling. It hasn't, the candle's still very good. And you're looking at it, let's see if I can get that, here we go. In the 120-minute chart, making a peak E, this is a chance that maybe crude oil, as everyone, I mean, there's a show that you haven't heard where we're talking about crude oil going from the 60s to the 70s, maybe even 100. Maybe this is the period with the market perhaps being showing that there could be a little bit of a recession going on here, kind of a select sector recession. Maybe crude oil actually pulls back a little bit. So if that's the case, if it takes out 63.81 and just extends this leg E, and actually if it closes above 63.81 on the continuous contract, that's actually a positive. But if it's by the end of the day, if it's tried to rally and then it's failed, and then all of a sudden the 9-period moving average of 61.50 is taken out, and then over Sunday night into Monday, instead of bouncing to new highs, which we expect almost after every single weekend for weeks and weeks now, it suddenly slides under 60.53. We might be seeing a confirmation that in the shorter term, the reason why we are seeing the market overall weakening with very select, even Wednesday's huge move up, essentially was very selective, very, very selective. What we could be looking at here is that maybe crude oil is saying, just be a little careful here because it's taking a little breather. And maybe based on all the technicals, it is a little breather and just starts to rally again. but it's something to look at. So those are the parameters to look at. And the reason why I want to make a big deal about it is, look, the dollar, well, the day is young. In fact, the real trading hasn't begun yet at 9:30. We're at 9:21. If the dollar is able to close at its high, that's going to be very important. That would mean it has to close above what it's done now in the pre-market, which is go to 90.77. So if it's able to do that, and then by Monday it's taken out this left side high of 217, that is at 91.06. Remember, we're talking about the continuous contract. I know when people trade, they trade all different months and a whole bunch of things going on. I'm just making it as simple as possible. I'm using the continuous contract. It seems to have given us parameters to look for as much as possible. And the same thing with the dollar. The dollar index has been just holding steady. And there's a little bit of a relationship with crude oil and the dollar, but that historical one is kind of dissipated over the last, certainly the last year. But what I am looking at here is if the dollar is able to do that, and you do get the pullback in crude oil, there's a lot of ifs, but that's the way we have to look at the market. What if this? What if that? And if the TLT is making some kind of a low, look, the on-balance volume, the stochastic is at 9% and flat. That's usually not very bullish. The MACD is still weak. The histogram of the MACD is still very weak. So there are a lot of ifs here, but I am saying if there is a move into the rotation that we've been looking at, we've seen the rotation in the tech sector through the different sectors within that, the subgroups. And we might be looking at something here that just gives us clues as to whether or not this is going to be a really serious decline. Don't forget, the VIX index yesterday ran up to 30, did it hit 31? I can't remember now. That was 31.16. In the Chapman wave, that's peak A, peak B, peak C. If there's no new high today, well, we don't know about that. So in the meantime, there was a rally. And remember my rule of thumb for the VIX index, I've been talking about this for a little while, is that if there's a really sharp decline in the key indices, together with the VIX closing that day almost at its high, and then the following session, there's another very weak outcome in the indices as the volatility index climbs and then again closes at its high. Look, it hasn't been able to do that. What I'm talking about, every big candle that you've seen on the VIX on the left side fades after that big green candle. Look, fade, fade, fade. Even though you went 3 days later after the high of this 27th of January at 37.21, the next day was a peak D, and then you went to a peak E. Very unusual, actually, to get these peak Ds in the volatility. It's the only index that I always say don't expect peak Ds there, because they can go huge to a peak B or a peak A and then fail for months. So this is going to be very important. What happens next is going to tell us a lot about what to expect, not over the next week, but over March. So what I'm looking at here, let me just do this real quickly. I think I've covered, high-grade copper. High-grade copper is trading right now this is at a peak D. If there's no new recovery high today, at a peak D. How many Ds can we see here? And that was a very simple technique I discovered, hand charting way, way, way back. And it stood us in really good stead. It can go higher. It's at peak D. Other things can happen. That's what you got to remember. So before we start the session today, let's just see a couple of things here. I want you to check to see where the SMHs are. Are they rallying at all? Yep, up 3.92 at 240. There's no other way I could count it. It's very unusual to make an all-time high in the daily chart at a peak C, but there's no way I could flub it. But that's not the Chapman wave methodology. It has strict rules. This would defies the rule. So is there going to be a rally above 258.59 to get to that leg D? I don't know. But it definitely looks like everything else is saying the MACD turned down, stochastic turned down, the on-balance volume turned down, the relative strength is turning down. We've got another day to go, and this 9-period moving, this technique that I had webinars on, I discuss all the time, where the 9-period moving average goes underneath the 14-period moving average and changes its color from green to pink. That would be a negative. And the weekly chart, I'm calling this an F. I don't have any reason to call it anything else right now. So we'll be watching this very, very closely. Why? Because the weekly charts, technically, even here, the 87% in the stochastic is terrific. MACD hasn't turned down yet, so it's the unfolding of all the different support levels if they get taken out, or how retracements to the upside occur and what they do. And I'm saying if there is a rally by Monday at 236, if it can get over 248, 249 and close there, I would say that's actually quite good action. But if there's a close next week, anytime there's a close in the SMH, is the semiconductor market vectors ETF, that says, oh, be careful. Semis lead us up, semis lead us down a lot of the time throughout the last many years. I'll be back in a moment for the opening bell. Basil Chapman, sitting in for Larry Pesavento. Great what you see. Back in a moment. And
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And they're off. Here we go. The Dow is down 10 points and the S&P is up 16. Up 16. We're looking at the start of a day that is going to be really important to see how much rallying there can be. If there will be a rally to the upside in the Dow, the S&P is already doing that. And which sectors show that the beating that they took yesterday allowed new investors to come in and pop up certain stocks, and we'll run through them in a moment. And just while we're talking about new investors, I'll be doing a webinar on Tuesday. This is Basil Chapman sitting in for the one and only Larry Pesavento. Took the week off because for some reason he thought this would be a volatile week. Come on, what volatility? So congratulations, Larry. He'll be back Monday. So most importantly, what we're looking at is within the context of the E-mini, it's down. I got the bonds. Let me just do this quick. Let me just run the numbers. Here we go. NDU, the Dow the cash is down 40 points at 31.361, having made a peak. Remember that, I just need to show this for some people who might have just tuned in. In the Chapman Wave methodology, we're always looking for, there it is. We're looking for 4 higher peaks. We label them sequentially, alphabetically, all the way to G, but it's at that 4th highest peak that other things can happen. And that D is where we're looking at, look, we went to a peak D. That was missing the other day in the futures, the YM, and I spent like Monday and Tuesday talking about it. Oops, went to the wrong window. I spent some time talking about it and saying, well, wait a minute, we haven't got leg D in the Dow futures. And boom, that Wednesday, huge spiral to the upside. It went right to a new all-time high, touched the 32,000 level. Thursday, we actually went a little higher. Can you believe it? Went to 32,033 and then slumped. 32,033 slumped to 31,242. Today's low so far is 31,142. I suspect there are enough people here that want to do some buying, so we're going to talk about that in a moment. But let's just do this. Dow is down. What is it down? 24 points. The S&P, it went to a peak E. I have to change that. That really does everything about it. Looks like it's now peak E at 39.50, and that was around about the 16th of February, and then it pulled back sharply to 38.05. Had a strong day Wednesday, sharp sell-off yesterday, but didn't take out the low, and that's going to be very important. Why? Because the 50-period moving average is at 38.05. When we see the S&P cash start to trade in the 37.90s, there's a different clientele. Now you've got people that will be looking at it and say, uh-oh, lower lows, lower highs, I've got to be careful here. And right now, as we're talking, this is not the end of the day. Oh, yeah, I shouldn't have mentioned it. There, you see right here, there's a little S in this daily chart on the left, weekly, monthly, on the right. There's an S. If that S kicks in by the close today, that'll imply that you've now got in the 9-period moving average going under the 14-period moving and changing from green to pink. You've got a sell signal confirmation in the daily. Usually it goes sell signal very quickly to sell mode. The implication there is that the consolidation so far has been much deeper. And so let's just look at that. Let's look at the QQQ, the NDX 100, trading up 3, lousy bounce so far. It needs much more than that. It needs to get to 319 to 321. And even more importantly, what we're looking at here is the 316.05 area is where it is right now. You do not today want to see any slide under 312. Yeah, 312. A close under 312 would be very negative. And this is the crowd that we're looking at, because the big techs. Look at this, Amazon making lower lows and lower highs, still within a big rectangle formation. Look at Apple, and I'll be talking about some of these in my webinar coming up on Tuesday, where I talk about what are the implications with the huge. It's actually an astronomical increase, geometric, exponential, you can call it anything you want, of the public that have come into the market over the last 3 to 6 months, especially over the last 3 months. And what's the implication? What are the negatives? What are the positives? What does it mean? What stocks and sectors should we be looking at when they've come in? What happens to things like the GME? Where is that trading today? It's at 123, up 14. What about AMC? What? Are these stocks that you want to mess around with? Well, a price is a price. And if you have a technique that you can use and you're able to grab it, you're able to put in stops, there are ways of trading it, and I'll talk about that. But mostly I want to talk about 2021. What is the implication of the S&P only in leg B right now, with a pretty good chance that March, I'm going to say March, yesterday I said April by mistake, March will see a red candle. It doesn't have to close as a red candle, but it'll see quite a bit of a red candle. And I'm suspecting we will get a peak B in March in the monthly chart. And there's a peak E already in the weekly chart. IWM, look at this, IWM, weekly chart, peak D, but it's holding very nicely. And let's go to gold. Gold right now is down 18, making new lows. And these lows are lows that we haven't seen since, I think that was November, October. Let me just double check. Yeah, look at that. June of 2020. 1701 was the low, and here we are at 1756. Underneath the 9-period moving average, under trading right now on a monthly basis for the first time under the 14-period moving average. Look how fantastic this technique is. When it broke out right there on the monthly chart back in June of 2019, 1397 low, 1529 high. Not once did it close. It did break under it, but closed much higher back in March of 2020. This is the first time there's a chance that we're going to close under it. That's serious. And that says, watch out, silver's holding way better, but it's still quite weak. Look at that. Down 0.80 at 26.69. Most importantly, what we're looking at here is high-grade copper. Is that going to pull back today? This is a key moment. Peak D. What did we just? I just show you peak D in the Chapman wave. Got to respect that. Leg E in the monthly. A leg, an amazing move from $2 to over $4 in the monthly. Got to expect some kind of a consolidation. And let's go back to the crude oil. Let's just see what it is for our traders. So had a question, 62, 60. Now it's only down 91. This is just an initiation of the chance that maybe we're looking at this little doji candle. This crude oil is still heavy because there are so many positives going for it. But just on a shorter-term basis, if crude oil does pull back and actually can touch the 60.50 area, that'll say, hey, be careful, because we could be looking at selective recessionary areas in the market, not a total recession, but certain areas. Let me just see what JETS is doing, JETS. I haven't updated that for a while. That's airplanes, U.S. airplanes. So this is peak A, peak B, peak C. All right. So, and that's leg E for now. I'm calling it in the weekly chart. So that is the U.S. What is it? U.S. Oh, this is JETS, airlines. So 26.09, up 0.09. I'll be back in a moment.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archived workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. I had a question about JMIA, which is Jumia Technology. I believe I got this from Investors Business Daily, and I did the notations, but we have no position in it. In fact, I forgot about it. I had a question about it. So, Satish, I don't know what your position is. Excuse me, let me just get a drink. There you are. But it's making that arch formation after making a peak E in the daily, a peak D in the weekly, only a leg B. So looking out, and maybe I'll just make a note of it. Maybe I'll include it in what we're looking for in the coming weeks, what to look for, stocks that are potential, JMIA, potential buys. But I'd hold off right now. Just give it a little time. Look, it's right on the weekly 200-period moving average. It's gone under it. It's a little bit above. Give me a yell when it goes to, it's at 45 right now. If it takes out 39, hold off, and then give me a yell if it's trading anywhere in the 37s. Gee, that's 7 points lower. 37s. 9 points, actually. So, yeah, I'd hold off. I'm not even going to give you a price right now other than to say everything about it is weak. In the daily and the weekly, the monthly chart still has some strength. And that says, let's see when to get into it. If you are in it, I would just make on some part of my position. I don't want to go into that long-legged candle of the 23rd of February. So the low is 41.52. Look, if it closes, if it slides under 44.39, I would take a little bit off. If you're on long-term and you've done your homework and you still like it, that's where I'd take a little bit off. Now, a couple of things we need to look at here. There's questions came in. So let's just do this. Wheat. Remember, I believe I showed this yesterday. Peak D in the daily, pulling back a little bit. I suspect from the technicals that there's a little bit of resistance at 663 right now, down 12. This is the continuous contract. Anybody who trades, they use all sorts of other things. I'm just giving you the continuous contract. That's where I do. I never traded, but we do own the DBA. I forgot to mention the DBA, which is the started along at 13.77 back in July. We've taken just one little tad off, and it's trading right now at 1743. So it's gone from 1377 where we got in to a high 3 days ago of 17.61, and we still want to hold it because I think the whole DB Agricultural Fund, I think the whole area is going to be. You're starting to see inflation in many areas. So now let's do this. I want to go to soybeans. Soybeans are trading right now at 1403, down 4.5. That, I don't know yet whether I have to rename this. Sometimes I have to do a renaming because it went above that peak E in the daily chart in January to the 14, just under 1440, and it didn't take out on the pullback. It didn't take out the starting point. So this could still be a continuation. Is this an E/C? You don't have to make any decisions right now because it is an E in the weekly chart and a huge A in the monthly. And you can expect, regardless, I'm expecting that sometime in March, there will be a bit of a consolidation rotating through all the different sectors. Let's go to we want to go to Caen, as we say in Boston area. I'm in Newton, just outside Boston, about one of the suburbs, the greater Boston area. 544, 545, down 4.5. This has got, remember yesterday I said it's gone to a peak C twice now, and it's got an inside rectangle formation. It's just kind of stuck. The big thing is if it closes below right here, if corn on the continuous contract closes below 533, a close that is, then it's probably going to make that dreaded H pattern, the pattern that we're talking about, that red one, comes down and arches over and retests the low. And that says be careful because you could retest the low of the 11th. That was at 523. But if it manages to get to a leg D, but it's underneath that previous high, it can't just get to D at 560, 563. It has to continue all the way to break above the high that was made on the 8th of Feb. Let's look at sugars, SB. Made a peak D. How many peak Ds? Look at this peak D right here, pulls back. Daily peak D right there, pulls back. Leg D in the weekly chart. Only leg C in the monthly. So shorter term, a little bit of a consolidation. This is all part of the DBA. Now let's go to the market because I want to show you a couple of interesting things. And this is stuff that I'll be talking about in my webinar coming up Tuesday for subscribers to my opening call newsletter. You'll actually be able to take advantage of 7, 8 or more webinars you can go to on all these different techniques, and I'm discussing it. It'll be free because if you don't like it, you can unsubscribe. It's a month trial, and you get my webinar. So I'm going to be talking about the IAI. The IAI is pulling back here, and this is really confusing. One of the few times in the chapter wave methodology where, yes, there could be an alternate count, but why? So iShares broker-dealer index goes to 42 down to from 72 back in February of a year ago. 72 has a little bit of a decline to 42.54 March the 23rd lows. Turns around. We were very lucky for subscribers. Some subscribers were able to get in long at about 45, and we watched it double. And I'm saying, look, in the Chapman Wave methodology, the MACD is good, stochastic's very good. Everything about this says it really should be a peak B. I cannot rule out that peak E at 87.62 on the 12th of January, pulling back sharply to 78, 9 points. That's a big move. And then starting a new move up with the stochastic starting fresh, the blue on balance volume starting fresh, the MACD starting fresh, that this really is a B. And that's saying to me, you know, we might not have any big crash or anything like that. We might see sudden big moves like we saw both Wednesday and Thursday, and that there'll be a slightly lower highs and lower lows, sideways move if the IAI, the broker-dealer and securities ETF, which has very low volume. If you're thinking of trading this, you've got to be careful. Look today. The total volume is 2,477 shares. But we wanted it both as an icon because we had looked at it and said, the next big move is going to involve the brokers. It's going to involve some of the financials who have brokerage accounts, and we want to be in this. And so, as I'm looking at it here, it says that only if there is a close, not a slide, if there is a close for 2 out of 3 days that closes decisively under 87, 88.69 is the 14-period exponential moving average. To get this green line to cross negative, you'd have to see 85.50 on the IAA. That's what it would take to get that to go from being really positive to just slightly negative. At that point, the MACD will have gone, look, the MACD is not as good as strong as it was back when it made the high in January. So that's a sign to say, okay, it's good, but it's not good enough. What is really good is 90% in the stochastic. That's great. But Look how it got overbought there, but it hasn't even, it's reluctantly pulled back today. It's down 43 cents at 90.76. And look at the weekly chart. The MACD is really strong. Stochastic is great at 91%. On balance volume, my clue, it says, whoops, be careful, a little overbought. So I want you to show you how I'm going to be going through the webinar on Tuesday coming up for subscribers to my opening call and what it's going to mean, because it's going to tell me that the positives of the XLF, which is the financials, which is down just 10 cents right now, 32.84, could continue and be a real big leader in 2021. A lot of things going on. I'll be back in a moment. Basil Chapman sitting for the one and only Larry Pesavento.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So, folks, Basil Chapman sitting in for Larry Pesavento, and you're going to be going over to the Bull Bear Binary Hour coming up with Tom O'Brien, or maybe it's Tommy O'Brien. And then you've got Think or Swim. Then I come back in at noontime for the Tiger Technicians Hour. Then, of course, you've got Steve Rhodes, Dave White, and then Tom O'Brien wraps it up today. So great programming. Just a quick question I had about GBTC. Yes, this is a Bitcoin futures. The continuous contract made a peak F at 57,790. We've been long since about 12,400 via the GBTC. We've been taking off all the way up. I think it's going to be in a sideways range. Will it take the place of gold at this particular point as a fear factor just to go into? I don't know, but I do think that it's made its high and it's going to be very choppy for the next little bit of period. And just real quick, I had a question about my intraday charts. Yeah, look at this. Peak D was the top right there in the 10-minute chart of the E-mini. That was at 39, I think it was 39.32 or something like that, around about 7 o'clock. And what happened is keeps coming down. And where are we right now? Right at this particular moment. Let me get this chart up right there. Oops. You mustn't rush these things. We've just made a peak D again. Right there. Where? On the pink 200 period exponential moving average. Bam, it hits it and it gets repelled. How the Dow and the S&P and the QQQ, the NDX 100 and the Russell 2000 are able to come back anytime today for a rally to try to pierce the initial pop to the upside. It's going to be a big question. As I said, closing sharply lower, not a good sign. It says that we've established some kind of change in trend, and that trend is down, at least in the short term. My weekly charts haven't given a signal yet, but the daily chart says, whoa, be very careful. So with that, we're just about to wrap up. And once again, just a reminder, my newsletter, the opening call for subscribers to my newsletter, we have a webinar coming up on Tuesday. It really is about what is this huge increase in the public's participation in the stock market these past few months. What are the implications for 2021? You can see my monthly charts are saying we should still make higher highs. It doesn't say how high, but it says higher highs. This is a consolidation, a much-needed breather that we're having right now. Stay tuned for Tom coming up. And, of course, we'll be back. Great program all day. Have a wonderful weekend. See you Monday for my usual show.